Welcome to Cyprus Tax Life. Today's episode might save you a lot of money and headaches because we're covering the 10 most common tax mistakes people make when moving abroad. I've seen every single one of these happen in real life, and some of them are seriously expensive to fix after the fact. Mistake number 1, not properly ending your tax residency in your home country. This is the big one. People move to Cyprus, set up their life there, but never formally notify the tax authorities in their home country. In Spain, for example, you need to file a specific declaration, the Modelo 100, and prove you've established genuine residency elsewhere. If you don't, your home country can still claim you as a tax resident and tax your worldwide income. Double taxation. Not fun. Mistake number 2, keeping too many ties to your old country. Tax authorities look at your center of vital interests to determine residency. If your spouse, children, main bank accounts, car, and social life are all still in your home country, simply renting an apartment in Cyprus won't cut it. You need to actually move your life, not just your tax address. Mistake number 3, not tracking days properly. If you're using the 60-day rule in Cyprus, you need meticulous records. The tax department can and does request proof of days spent in Cyprus and other countries. Keep boarding passes, passport stamps, flight records. And remember, spending 183 or more days in any other single country disqualifies you from the 60-day rule in Cyprus. Mistake number 4, confusing tax residency with citizenship or visa status. These are 3 different things. You can have citizenship in one country, a residence permit in another, and tax residency in a third. Tax residency is determined by where you actually live and work, not by your passport or where you have a visa. Mistake number 5, setting up a company without substance. Some people register a Cyprus company but have no employees, no office, no clients, and no real operations there. This is a shell company, and tax authorities in your home country can challenge it under controlled foreign corporation rules. Your company needs genuine substance, real business activity, invoices, contracts, and proper bookkeeping. Mistake number 6, ignoring exit taxes. Some countries, like Spain with its exit tax, will tax your unrealized capital gains when you leave. If you own shares, property, or other assets that have increased in value, leaving without planning for the exit tax can result in an unexpected bill. Always check your home country's exit tax rules before moving. Mistake number 7, thinking non-dom means no tax on everything. We covered this in episode 1, but it bears repeating. Non-dom status in Cyprus exempts you from the special defense contribution on passive income like dividends and interest. But employment income is still taxed at progressive rates from 0 to 35%, and corporate tax at 15% still applies to your company's profits. Non-dom is powerful, but it's not a blanket exemption. Mistake number 8, not filing annual tax returns. Even with all the exemptions and low rates, filing is mandatory in Cyprus. Every year, skipping it can jeopardize your non-dom status and result in penalties. Some people assume that because they pay very little tax, they don't need to file. Wrong. File every year, on time, every time. Mistake number 9, getting advice from the internet instead of a professional. Look, I appreciate the irony of saying this on a podcast, but general information is not a substitute for professional advice tailored to your specific situation. Tax laws are complex. They change frequently, and what works for one person may not work for another. Get a qualified accountant and ideally a tax advisor who understands both your home country and Cyprus. And mistake number 10, waiting too long to plan. The best time to plan your tax move is 6 to 12 months before you actually relocate, not the week before. Not after you've already moved. Getting the timing right on things like exit taxes, pension transfers, company restructuring, and asset disposition can save you tens of thousands of euros. So there you have it, 10 mistakes that trip people up when moving abroad. The common thread? Planning and documentation. Move intentionally, track everything, file everything, and get professional help. For detailed guides on each of these topics, visit cyprustaxlife.com. Next episode, the 60-day rule explained, how to become a Cyprus tax resident with just 60 days of presence per year. See you then.